What's up, guys? Welcome to another episode of Crypto and Coffee. You know what? Coffee's just not going to do it today. Crypto and champagne today, boys. Congratulations, Bitcoin 10,000. It's unbelievable how fast this actually happened. I remember at the beginning of this year, Bitcoin was around $700. And I told friends, family members, peers, anyone I could tell about Bitcoin and how this was going to change the world. Not just Bitcoin, but blockchain. Not many bought, some did. I'm now Uncle Scott to them and their kids. But those that did buy were unique. They saw value. They were willing to take risk. They were early adopters. People that were betting on a change in the status quo. And on the other hand, the people that didn't invest, I saw a very similar trait. And in fact, not only a trait, I often heard them say the same thing. So many of my friends would say, I'll wait and I'll buy it lower. I'll buy it once it goes past or below $1,000 or $2,000. Well, guess what? They're still waiting to buy. And there's a very famous saying in trading, you buy low and you sell high. Makes sense, right? Well, the problem with that is it's hard to buy the lows and it's hard to sell the highs. If you knew what they were, we'd all be rich. A better way to trade is buy high and sell higher. You want to find assets, and this is not only in crypto, but it could be stocks or other financial instruments that are trending upward in a bull market. You want to buy those and sell those higher. I can't tell you how many people that I'm talking to right now that I told about Bitcoin and other cryptocurrencies that are full of regret. Just because Bitcoin is now over $10,000 does not mean it won't be $20,000 in another month or 2 months or $100,000 in a year. The landscape in crypto is changing, and that's what I want to talk about today. In my opinion, right now, cryptocurrency has reached either a tipping point or we're seeing the biggest exit pump in the history of exit pumps. The exit pump really doesn't make too much sense to me. The only potential validity to that is the Tether situation, which we discussed last week. Is the price being artificially inflated? Maybe, but I doubt it. And here's why. Right now, we're seeing institutional players start to come into the market. And how do I know that? Well, one, the CME on December 10th is going to open up Bitcoin futures. Now, what does this mean? Well, this means that the power, the financial power behind the traditional markets is going to be able to access Bitcoin and have a direct impact on the price. This is huge. Not only that, this morning, NASDAQ released plans to also have Bitcoin futures listed in, I believe, before Q2 of next year. Now, this could be an exit pump, or it could be a sign of institutional money starting to see the value in the future of Bitcoin and other cryptocurrencies and racing to get in. Now, that's what I think has happened, and I think there's a really telling clue that has been happening over the last 2 weeks here. Now, we've all seen Bitcoin's incredible rally over the last 3 weeks. It's unheard of. But what we're starting to see now is altcoins rallying with Bitcoin. Now, if you remember over the center part of this year, let's say from April all the way to September, even October, anytime Bitcoin would rally, alts would fall off a cliff. They wouldn't outperform Bitcoin, never. I mean, you had to have some spectacular news or some type of spectacular pump to ever have an alt outperform Bitcoin on one of these monstrous rallies. But over the course of the last couple of weeks here, we've seen numerous alts outperform Bitcoin. And that, to me, is a sign of a lot of new money coming into the market and looking for places to invest. Not only looking for places to invest, but looking for undervalued assets. So, what does that mean? Well, it means we can go a lot higher. Now, let's put things in perspective because that's all price is. When you look at Bitcoin and you see $10,000 or $11,000 as it is now, that seems expensive to you because you've seen Bitcoin at 600, 700, 2,000. So now you see it at 10,000. It's wow, that's too expensive. But is it really? Keep in mind, there are a limited number of Bitcoins. Now, I'm going to take these numbers off the top of my head. I think there's roughly 16.5 million that are created right now or minted. And there's only 21 million that will ever be in existence. Now, of that 16.5 million, I read some articles yesterday that estimated that roughly 3 to 3.5 million of those are lost or no longer accessible. Now, think about that. If the overall supply of Bitcoin is 21 million and 3.5 million of those are gone, well, that's roughly 15 to 20% that will never be in circulation. So that only increases the price of Bitcoin. Not to mention, as more people find out about Bitcoin, as financial markets get interested in Bitcoin, it's further going to push the price up. Not to mention, a lot of people that hold Bitcoin don't sell it. They just put it on their Trezor in their wallet and they just keep it. So supply is even lower. So the price of Bitcoin, a very rare commodity, could easily double, triple, 10x over the next few years. In fact, I expect it to. Barring a fundamental change in government, technology, or a complete catastrophe with Bitcoin, I expect it to double. I expect it to triple. In fact, I expect a lot of other high-quality coins to take off. And this may sound like maybe I'm trying to inflate the price, or I have nothing really to back this up. Well, my question to you is, what's happening right now in this market? Where's the money going to go? If you want to buy Bitcoin in a significant level, an institutional level, how much is that price going to go up when you want to put $20 million on, $30 million, $50 million, $100 million, $1 billion? I mean, that's what we're seeing right now. Go to a market, go to Bitfinex, Coinbase you won't be able to use, but Bitfinex, GDAX, Polo, Bittrex, and try to buy $10 million in Bitcoin. Just try to buy it. Now, that's not obviously what they're doing. They're not going to hit the market for 10 million, but try to see how far the market would move. And that might give you some indication of what would happen to price as some of these institutional players start to come on. Now, keep in mind, these institutional players are much better at trading than us. They have faster and better technology. So trading is going to become a lot more difficult. I promise you. Using technical analysis is going to become a lot more challenging. Things are becoming a lot more volatile. Rebounds are going to be quicker and faster and more decisive. And any chance of arbing by hand is likely gone. Now, it doesn't mean it's there yet, but as these bigger players come in, we're going to see everything start to optimize. Right now, the markets are not completely optimal. They don't run efficiently as they could in crypto. I often see arbitrage opportunities across exchanges. I imagine as some of these bigger players come in, those will be gone. I often see panic sells from inexperienced traders. As a coin, plummets through support, they sell into that support, and right away, it bounces back. Those people are going to start losing their money, are either going to lose all their money or resort to just holding their coins. So we're looking at a lot of changes here. Now, one thing that I think is very interesting is the developing relationship between Bitcoin and Bitcoin Cash. Now, many of you, in fact, most of you probably think Bitcoin Cash is nothing more than just a fork, a scam, something that does not hold value. I completely disagree with you. Bitcoin Cash does have a lot of value. Not only that, it has a lot of power. Bitcoin Cash is supported by a lot of the Chinese mining and manufacturers. So that means they have a ton of hashing power. And if you're not familiar with hashing power is the computing power that secures the Bitcoin network and makes it functional. Bitcoin Cash has the support of those miners. It also has bigger blocks, which may become an issue for Bitcoin as it scales. It has faster transaction times, and it has lower transaction fees. Now, am I saying that it's going to surpass Bitcoin? Absolutely not. But there are two separate use cases here. And I think over the next year, I think that is going to be the narrative. Bitcoin Cash versus Bitcoin. Now, Bitcoin Cash strives to be kind of a point of sale solution. You go into the store, you spend your Bitcoin, the transaction's very cheap, it's seamless, it's fast. Bitcoin doesn't really do that, at least not that well. I don't know if you've ever tried to buy something with Bitcoin. It's a little clunky, it takes a little long, you have to wait for confirmation and whatnot. So it's going to be interesting. And here's what I'm seeing in the market. And I saw this last night. We saw Bitcoin go right past 10,000. It was amazing how easy it went through that resistance. And it got to, I think it was around, 10,500, 10,700. And there were some pretty significant market sales or dumps into the market. And on the other side, if you check out BCH, Bitcoin Cash's chart, those sales went right in to Bitcoin Cash. So there is a developing inverse relationship between these two. And I think it's really important to pay attention to this. Not only is it really important, it's actually a really good potential trade. If you're able to, or if you're comfortable trading these types of swings, I would strongly look at Bitcoin and Bitcoin Cash as a fantastic trade over the next few weeks here. Not only that, maybe into the next year. So one of the strategies that a good friend of mine has been preaching for a while, and at first I was a little apprehensive to listen to this type of strategy because I was a firm believer in altcoins and their potential future value. He believes in what's called the superposition. So what's a superposition? Superposition is holding a 1-to-1-to-1 ratio with Bitcoin and all of its forks. So right now you would hold one Bitcoin Cash, one Bitcoin Gold, and I guess maybe even a Bitcoin Diamond if that's actually a real thing now. So 1-to-1-to-1 ratio is a hedge against yourself, right? So now you're going to get all of that potential upside and none of the risk of just holding one bucket of Bitcoin. So just to wrap things up now, guys, congratulations those of you who have been in cryptocurrency for a while and have seen it rise from the hundreds to the thousands to now 10,000. Congratulations. I hope you made a killing. I hope you made a lot of money. And I hope to see you again on another video when we reach 100,000. And also to wrap things up, think about money that's flowing in to crypto right now. Think about high quality coins. If you're an investor, if you're coming from one of these institutions, keep in mind right now you have a small edge on these investors. You know which coins are high qualities, have good teams behind them, have good technology. Where is this money going to go? My personal opinion, my favorites, I like Monero, I like Litecoin, Bitcoin Cash, even Bitcoin Gold. All of those are in my long-term portfolio. Also, I really love the privacy sector. I think that's going to be a big thing over the next couple of years. So the privacy coins, again, Monero, Zcash, Dash, Zcoin, all potential great investments. So try to use what you know right now to better position yourself for all this capital that's coming in. And lastly, really, really take a look at this relationship between Bitcoin and Bitcoin Cash that's developing. And like I mentioned, it's an inverse relationship, and that's why it's so important to hold 1-to-1 ratio. So in case Bitcoin does come down significantly and that money goes into Bitcoin Cash, you're not losing money. You're having some sort of hedge, even though Bitcoin collectively as a whole is likely still to rise. You don't want to lose out on that other coin's increase in value. So I hope that was helpful, guys. Again, congratulations. I'm excited for everyone. I hope to see you very soon with more exciting videos. And until then, guys, to the moon.